Now, profits at Europe's biggest bank, HSBC, have been cut in half by the effects of the coronavirus pandemic. The lender is also setting aside billions of dollars to cover bad loans in the coming months and has warned of the potential for more difficult times ahead. For more, we can go across to our business editor, Stephen Carroll. Stephen, this is a stark warning from a major bank about the economic damage from the pandemic, isn't it?
Profits at HSBC down by almost 50% in the first 3 months of the year. The bank's CEO saying that its business has been substantially affected by the Covid-19 pandemic, and it's setting aside $3 billion to cover bad loans. And that gives us an indication of just how, I suppose, worried HSBC is about the situation and how it will affect the loans on its books and whether those loans will be able to be repaid. They're not the only bank to have done this. 6 major US lenders have also massively increased their provisions for bad loans to preparing for the worst that may still be to come from the economic tsunami linked to this pandemic. Some good news potentially for HSBC employees in these results, though. The bank had announced earlier this year that it was cutting 35,000 jobs. It now says it's put those layoffs on hold so that to remove some of the uncertainty for employees at such a difficult time in the labour market. But certainly looking ahead towards the rest of the year, HSBC saying that it expects materially lower profits in 2020 because of the pandemic.
Now, Stephen, switching gears to oil next. US oil has slumped again today after we saw that plunge last week where it went into negative territory.
Yeah, that's right. And this is giving us another indication of the speculation that's going on in the oil market. So what happened is that a major investment fund that invests largely in oil, it's called the United States Oil Fund, sold all of its contracts for oil that was to be delivered in the month of June. Now, that's about 20% of its holding, worth around $700 million. And that massive sell-off in the market pushed oil prices down significantly. West Texas Intermediate, which is the oil that's mainly produced and sold in the United States, fell by 25% on Monday. Today in trading, it's down 10%, down around $10 a barrel. So not negative, not in minus territory as we saw last week, but that pinch in the oil market still there in a situation where there's massive oversupply and, of course, hugely reduced demand because of the shutdown that's affecting the majority of the global economy. A lack of storage as well, also making it difficult for oil to be stored in the short term. And that's why these short-term contracts are seeing their prices pummeled really on the markets at the moment. Another example of the difficulty in the oil markets being reflected in the results from oil giant BP today. Their pre-tax profits down by 66% in the first 3 months of the year. The CEO saying that the supply and demand shock is on a scale that they've never seen before. Now remember, oil was $70 a barrel at the start of this year. Now Brent crude, the international benchmark, around $20 a barrel. In any situation, that would be a huge challenge for the oil industry. But this time around, we don't know when demand is going to pick up again, which means that it's going to be very difficult for that industry to see prices recover.
Indeed. Stephen, thank you very much for that update. Stephen Carroll there, working from home.